guys are having a great day. So let's get the party started here. So how is this week going for everybody, right? So in our trading community, we decided not to take a lot of trades this week, more of a hands-off approach. We do have some bearish trades in the semiconductors. We'll see how they work out. But looking at the overall market right now, starting off with the S&P 500, we can start to see that, S&P 500 from this blue area that I have marked. This is from the FMOC minutes to when the FMOC will talk, which will be in, I believe, May 2nd. So this is something to keep an eye on. This is when Jerome Powell is expected to speak. Now, in this time frame, we're going to get a lot of volatility because we have earnings in this time frame as well. Okay, so looking at this right now with the EMAs, so we got the 100, the 50, and the 20. We'll just see how they are. They're curling downwards. That's okay. We're starting to see some sell volume as well. But what's important to pay attention to is price rejected the supply level, right? And then the second support zone that I currently recaptured was this 448. So when the price bounced here, and it held these wicks were pushing through this level here, right? So price started to go above, and we were seeing buyers come through in this time frame. However, what we started to notice and what I focus on in our community is follow through. If the stock or the market is going to continue, there's going to be a pullback, and there's going to be a pullback, and there's going to be buyers stepping in who are going to push the stock market higher. However, what we're not getting that right now. Stock market right now is in a free fall downwards. However, this is still okay, right? So if we just switch over to the line chart, so this wave up right now is still in control, okay? So the buyers are still in control. Sellers have to push through 416 to go lower. So right now we need to start seeing a bounce. We need bulls to step in. Now that could happen towards next week. This week could be a very slow grind, and it could be very hard to trade. So what I like to do this week is also OPEX. If you don't know what OPEX is, I suggest you read on it. So this is when a lot of options do expire, so which increases volatility in the options market. So I would suggest to stay away this week from trading completely, and just kind of observe what happens in the market just to increase your chances of success. Rest is up to you. You can take your own risks as you please. Now, if we look at the SPY right now, you guys can see the last 2 days, the range of the stock market. Actually, the last 3 out of 4 days, the range has been very small. So trading this market you're just getting whipsawed. So there's no point of trading this. This is indecision in the market, and this is expected because of volatility has risen in the market. There's a lot of uncertainty that's coming around, as well as this is a short week. So do not expect ranges to get wide here. If they do, that's great, but for me, I don't expect that to happen. But S&P 500 needs to get back above the 462 level and then start making a move higher here. And until then, we can get a quick bounce here, and a rejection is likely because we have more sellers stepping in this level, and buyers are nowhere to be seen for now. If we look at the Qs here, look at the triple Qs. The triple Qs respected this level of supply. It's gone below demand zone now. So this was the previous demand that it was holding, and we have 1 and 2 gap down. This is very volatile for the Qs. So tech is just absolutely getting killed right now in the market, right? And we can see it's still holding below the 100-day EMA on the daily time frame, and it's respecting that. We do need tech to start building up over the next few days if the market is going to recover. Just keep in mind, you guys can check the weighting of each sector on the S&P 500 or triple Qs by going on Yahoo Finance. It's a free resource for you guys to use, okay? But right now, tech does need to build up. The triple Qs, they're not looking so good right now. Overall, the trend is starting to turn. The MACD crossover is bearish right now. RSI is below 50. It's completely just losing strength. So we need a few days here to confirm that if the Qs are going to fall, and it makes sense that semiconductors right here are falling, and the ETF. XLK is also falling as well. So this is a very bearish sign for the market, just to keep in mind here. Okay, so Qs are looking very bearish right now. Rejected the supply. This could be a double top, and it's going to continue to fall. If it breaks this level right here, which is the 318 level, we're gonna head our way back down here. So I don't see any signs of bullishness. I do see signs of a sideways market, which is very dangerous to trade, especially for retail traders. I will suggest that you proceed with caution. Okay, so looking at Dow Jones here, Dow Jones also, we're getting top wicks here over the last few days. Top wicks are they're very unsettling for retail traders as well. This is not really a positive sign that we want to see. As you can see, is price holding below the 100-day EMA. That's not very good, right? So that's adding to the bearishness, right? Even though you know, Dow Jones is still overall holding above the support level, which is perfectly fine. But if it does break down here, it's not going to be good for the market. We're going to see a complete breakdown, and also the MACD is also signaling a crossover. So the last time the signal came was here, and you can see what transpired following that. Okay, so Dow Jones is very you know, undecisive right now. Small candlesticks, tight range. This is the market moving in sentiment, and liquidity seems to be drying up for now. If we look at the VIX, and I've been mentioning this, right? So I want to see VIX get below this level right here, the 20 level, which is right over here, right? So I want to see VIX get below this and the market push higher, but VIX is just respecting this upper range right here. So this could be an inverted head and shoulder, which can really pop out and make a really big splash here, right? So something to keep an eye on, right? So also gold is doing really well here. So gold is curling upwards, okay? So gold almost went to 185, right? But it can't come back down. But you can see the EMA is curling upwards right now for gold. So I'm still very bullish on gold, okay? And it's starting to make a move to the upside here. And its biggest level of resistance is 193. But if we start to catch a little bit more buyers to start this week off, we are getting some buyers in, right? So we'll see what happens here, right? With gold over the coming few days here, how this week closes. But overall, it does look like very bullish, right? So buyers did hold this level, right? It is pushing to 183. I want to see buyers follow through here, and we can push to 186. So gold is really bullish right now, and that makes sense because it's a hedge. Most people like to use it as a hedge, right? So if we look at KWEB, which is China, it's back in this consolidation zone. It's not really breaking down, not really breaking out here. It's consolidating. So this could be an area where KWEB decides to accumulate. If KWEB goes into an accumulation or a long-term accumulation, that's perfectly fine, and that's healthy for China in the long run. Okay, so which could be really good for stocks like Baba, Baidu, JD.com, you know, all those different Chinese companies. This could be really positive for them. That if this starts to consolidate, but however, China is dealing with, you know, the COVID breakout. They're also dealing with some defaults in the real estate sector, and that can push the economy onto a brink here in China. So also the other thing to focus on, what's going on in the market, is the sectors. So right now, if we look on this side right here, we can see the sectors that are up today is airlines. It's showing us up 2%, but if you see, airlines are in this long channel, okay, which could be a bull flag. It could potentially pan out in the coming next few weeks here, but we have to pay attention to this, okay? So if we're looking at this and the sectors are very sideways, they're very frothy, you know, we don't want to take part in anything that's trading in a range. We want to see clear breakouts follow through with volume, right? XHP, home builders. This looks like just a relief rally from selling. Price is way overextended below the 100-day. It's just completely getting killed, the home builders, but that makes sense. The housing market could be slowing down in the US and soon in Canada as well. So it makes sense for the home builders to be taking a hit to the downside, right? So today, this is just a relief rally. If you see, none of these sectors are strong that are leading today. They're not strong bull sectors that are leading today. Yes, money could be flowing into them that they could potentially recover, or it could be profit taking because people are covering their shorts. So you won't know. So these sectors right now that are supposed to be strong, like energy's, you know, energy's a little bit down today. But if you look at it, look where it's down. It's trying to break out, and some profit taking is going on, or some sellers are stepping in here. So we'll see what happens. So this is not really bearish right now for energy. Energy is still in a strong uptrend here. Okay, so that's something to keep in mind. And then healthcare, same thing. It tried to make new highs. It had a pullback. This is what I like to see. And now I want to see the next coming days that does healthcare actually pick up, or does it break down and go below 137? So overall sectors, defensive sectors are still in the lead. There's no argument there. So even commodities are consolidating here. So nothing to worry about per se in the defensive sectors. Okay, so if we look at utilities, utilities just consolidating, but this is a doji at the top followed by a sell. This does indicate a sell signal on most time frame. So utilities could break down here. Okay, so we'll see what happens with this. But looking at Bitcoin, let's see, we'll pull up here. So Bitcoin, I've been talking about this for a while. This was supposed to be my entry on Bitcoin. Fortunately, never got above there. So what I wanted to see was a retest of this ascending triangle break at the support. Retested this and pushed back higher. Unfortunately, that failed drastically. This is why I always recommend wait for the retest. Okay, wait for the retest before you invest into the company or that stock, right? So look at that retest. That saved me a lot of pain and a lot of headache, right? So I'm not really bearish on Bitcoin. Bitcoin has a lot of support at these lower levels, so it can go here. So this is a big swing that's setting up for Bitcoin right now. We'll see what happens in the following few days. But overall, the market is very cautious. It's very sideways. I do not recommend, risking a lot of money in this. This is a time to proceed with caution into this market. There are a lot of setups that are happening that we're giving out in our community on a day-to-day basis. But for now, this is a very cautious market, and I recommend proceed with caution.